What's going on, everybody, and welcome back to Make Your Own Luck Mondays. And again, this is a web series that I do here on YouTube where I take topics on personal finance, wealth creation, and investing and just try to break them down and make them as easy as possible to understand. And there's been a lot of talk around the election and what's going to happen with the stock market, and is everything going to fall off, or is Trump going to win and it's all going to spike, or is Biden going to win and everything's going to shut down? And I just wanted to talk a little bit about elections and how it affects the stock market. And then part two is really to talk a bit about my strategy and what I'm going to do during this time. And again, a quick disclaimer, I am not a financial advisor. I am just a dude in a beanie with a sizable stock portfolio of 30 individual stocks plus a bunch of index funds and different things like that. So if you want to make sure you have the best financial advice, go find a financial advisor or do your own research, because I'm just here doing this for entertainment purposes only. We're actually in a pretty prime time situation right now where we're basically a week out of when the election is going to take place. And this has been traditionally when we've seen the most volatility in the market. And again, as investors hate uncertainty, and we definitely don't like volatility. But that being said, it could be a great opportunity to find some good buys this week before the election happens next Tuesday. So what does this mean for the market? And I guess for me, I just wanted to know what happens after an election. And it looks like historically, whether it's a Democrat, Republican, whoever comes into office, historically, at the first year that they go in, there is a 5 to 6% return in the market. And that's all I really care about. Now, what are my strategies? So going into this week, like I was saying before, if we're going to see some volatility, we're going to see some up and down, I'm going to try to figure out some plays to put some cash to work. So I've been putting cash on the sidelines for the past few weeks, and there has been some up and downs, and I actually sold some stocks. But I've been putting money on the sidelines and just kind of waiting. And my wait is for basically this last week before the election. And if I can get into some plays, or if there's, some major dip or something happens like that, I will probably do one of a couple things. One, if we have a major dip, I will definitely put some money into my index funds, because anytime we have dips, I try to put some money in there. Again, as you guys know from my previous videos, I do a dollar cost average deal with those index funds where no matter how high the price is, low the price is, up, down, sideways, it doesn't matter. On the first of every single month, I always put money into those accounts. But that being said, if there's an opportunity to lower that number down a bit and come in on a dip, then I'll probably, buy some of those stocks as well. And as you guys know, I put money in the SPY, and then there's also some others that you could look at as well from Vanguard, VOO and VTSAX and other index funds that might work for you. The other thing that I'm going to do is I'm really going to look at some of my individual stocks that have been beaten down. And these are stocks like AT&T, ExxonMobil, and these, kind of dogs of the Dow type stocks, and or, stocks that have had, really good dividend yields, and they're just increasing because times have been bad, but they're, dividend aristocrats, and the companies really want to keep those dividends going and growing. So I'm probably going to end up dumping some money into those for sure. And, companies like AT&T and, ExxonMobil's a bit in a weird place. But I do think there's going to be opportunity for those stocks to bounce back, and they've just been beaten down so hard that now is a great time. I've been a long-term investor for both of those, and it's probably a good time for me to put a little bit more money in there as well. Okay, so what am I going to stay away from? And right now, I'm basically going to stay away from a couple different areas. One is REITs, so real estate investment trusts. And I have some, and they're down. They've been beaten down as well. But I'm just really nervous on some of those real estate investment trusts, because the market on, whether it be, malls or warehouse spaces or commercial real estate, these large real estate investment trusts, I just don't know what's going on right there. So I'm holding my REITs that I have, but right now I'm not looking to put any money in those. So I'm staying away from those. The other big one that I'm staying away from is my spec plays, and I'm probably going to get out of some of these around biotech. So obviously with the vaccine, with all these companies that have been coming in and trying to get a vaccine to market, it's basically been a little bit of a race. And I went in early and did some spec plays on a bunch of different pharmaceutical companies and biotech companies. And I really got greedy. Unfortunately, there were a couple that I had over 100% return on, and I just kept riding the wave, and now they've dropped down to about a 10%, 20%, and which is still really good. But again, I got greedy and just held on. So I'm probably going to dump out of those, to be honest, and really look at some of the key players that are trying to come to market. And that is, Pfizer, who I've been a long-term investor with. So I'm going to continue to put money into Pfizer, and I always do. Johnson & Johnson is another one, and I'm also a long-term shareholder of Johnson & Johnson. And I may take a look at Moderna. But that being said, Moderna is in an interesting spot because out of those companies, Moderna has never brought a vaccine to market. I was actually talking with a medical doctor, and we were talking about the length of time to market for vaccines. And the most successful one was for the mumps vaccine, which took 2 years. That's how fast it was. 2 years. And we're talking about here with Operation Warp Speed that we're going to have one, maybe by the election or by the end of the year or something like that. So there's a lot that goes into that stuff as far as, the average vaccine takes 10 to 15 years to really go through the full deal to make sure it's correct and ready to roll and ready to come out to market. So this Operation Warp Speed that we're doing is pretty nerve-wracking to me, and that's why I'm going to get out of those weird biotech spec plays, all that stuff, and basically put my money into, two of the three big ones that I think are really, doing something right, which would be Pfizer, Johnson & Johnson, and we'll have to see what Moderna is going to come out with. But that being said, if the fastest vaccine that's really gone through all the different stages has been 2 years, then I'm not going to start jumping on these horses of all these different biotech companies that are going to come to market with some miracle vaccine here anytime soon. I'm going to stick with the big dogs. So from a strategic point of view, what I'm going to do is basically what I've been doing. So that being said, whoever's in the White House, good on you for getting in there or continuing on or whatever you're going to do. But that being said, from an investment standpoint, from an investment strategy standpoint, I'm going to continue to do what I've been doing. And as long as I know that, hey, historically, the stock market has gone up the first year after a new president has been in or a midterm president has gone on, that's all I really care about. And again, I'm a long-term investor. I know that the S&P has delivered 9.8% returns historically over time, and that's really what I care about. I care about those long-term growth goals. I am a dividend investor. I am a blue chip company investor. I do some short-term stuff. I do some swing trading, and I do things like that. But at the end of the day, I'm about long, slow, and steady growth. So my strategy is to keep doing exactly what I've been doing. I'm going to use this week to look for some opportunities. Like I said before, I've had some cash on the sidelines, and I'm probably going to put it to work this week if I can find a good spot to put that money. Or if we get a cool little dip, I will just throw it in the index fund and call it good. So it's that slow burn to a consistent growth. It's the compound interest over time. That is what I'm looking for. So hopefully that helps out. Thank you guys so much for liking the video. Share with your friends. Subscribe to the channel. Hit the notification bell. And thanks again. We will see you next week right here on Make Your Own Luck Mondays.